I want you to take a look at something because you would not expect this. So if I told you that the NASDAQ 100, which is crushing it, is up here, but their growth has crumbled. Look at that growth. It's non-existent, folks. I mean, it's just really, really something that maybe we should be looking at. I know it's a euphoric moment, but this stuff matters. So let's bring in Rob Luna, Wealth Academy founder Rob Luna. Rob, at what point, should we start to say, take the money and run?
I think we're a ways away from that, Charles. I think, look, you're talking about all the things in terms of bullish sentiment and all those things, but you pointed out a lot of other things. Margin is nowhere where it needs to be. There's a lot of home equity that people could tap into. I think there's no froth in this market right now. Of course, we're going to have some volatility, loosen up your stops like you were just talking about. But, Charles, I think this market heads a lot higher. We've got an election that's coming where I think we're going to be talking about lower taxes, less regulation. At the same time, the Fed might be cutting. You have to be in this market right now.
And that's what's so interesting about it, right? So we talk about the market at all-time highs. We talk about housing prices that are hanging in there. Like most home prices are still extremely high. Most people are still positive on that. And then, of course, there's a notion that the Fed's going to cut in this environment. We're hearing people saying that earnings are doing wages are doing well. So how can we have solid wages, record high stock market, record high home prices, and the Fed cutting? Something's not right there.
Yeah, I mean, it's tough. And I think to Kenny's point, what the market was pricing in terms of cuts this year, I don't think we're going to see that. I think you might see 1 or 2 cuts. But look, if the market continues to be where it's being, and if you take a look at this potential, which I think is probable, of a soft landing, I don't think the market really needs that many cuts. We've got a lot of innovation going on. If you're in the right sector, earnings can continue to grow. I don't think the market is as expensive as a lot of people think.
Do you agree, though, that the higher we go, the more volatile we could become? And if that's the case, how are you handling that?
Yeah, of course. I mean, that's always the case, Charles. But I think you got to understand where you're at as an investor. So if you're trading, you made a great point. You want to really widen up those stops. But I do, like we've talked about before, believe we're like in a time like 1990 to 2000 where you need to take a longer term time horizon, buy the names that are going to be winners. Artificial intelligence is clearly one of those segments, and the money's going to be made by buying the dips, not selling at 10 and 20% gains when you could have 3 baggers, 5 baggers in this environment. That only happens about every 20 to 30 years, Charles.
And now you tell me, I sold a couple of those earlier last month. Okay, let's look at some of the names you like here because I love when you come with your stock picks. Taiwan Semi. Taiwan Semi felt like it was off everyone's radar. Then all of a sudden they had this one amazing earnings report. And not only did it ignite its stock, but it helped to ignite the whole semiconductor run.
Yeah, and if it wasn't called Taiwan Semi, I think the stock would be up 50% more, Charles. If it had a sexy name like NVIDIA. But NVIDIA, one of its largest customers, Apple, AMD, they're in the right place at the right time. I think the stock heads a lot higher. If you're not in NVIDIA and you're looking for a cheaper way to get in on that play, Taiwan Semi is the way to play that.
All right, CrowdStrike got 3 more upgrades today and like 4,000 upgrades yesterday. We don't need to go over that one. Yeah. It is crushing it. But I am curious about UPS. I got 30 seconds left. One thing that bothers me, I feel like inconsistent execution. What do you like about it?
Yeah, I like the valuation on this right now, Charles. I've been trading this stock for a long time. I think this is one of the stocks that when you get it beat up like this, last year we saw volumes down. We saw the strike that they were dealing with the 4.5% yield, valuations where they're at. I think in 12 months, this stock's closer to 200 than 153. And so if you want to reduce volatility, this is a name to add to your list.
All right, love it. A little bit of value investing in the midst of all of that. Thanks a lot, Rob. Appreciate it, buddy.
Thanks, Charles.
All right, folks.